All right, everybody. Welcome back to the Rob Review. I'm your friend in success, Robert Morris, and today I want to talk very specifically about why a lot of people, over 90% of people, fail to achieve what they want to in the stock market, especially after their first year. There's a huge drop-off in a lot of people, versus why you won't if you follow what I talk about in my videos. This is not specifically a system about how to trade, but this is a system about how to build a stock market business, which is more than just trading. And that's why a lot of people fail. Number one piece of the puzzle is the flywheel of stock market success, what I talk about as a stock market business of sorts. There's three pinnacle pieces, three pillars that you must have, and every one of them feeds the other one. And it becomes a massive, never-ending feeding cycle, getting each piece bigger once you do it properly. Of course, I'm talking about what's on the screen right now, a diagram of sorts, a flywheel of sorts that will be used continuously moving down the road. My wife showed me that this is the best way that I can demonstrate how each piece of these is intertwined to create stock market success in the center. Long-term wealth building is what the stock market is about, but if you are not born with wealth, or if you're not creating a company where you get stock options as a result of your performance, it costs a lot of money to buy stock. And if you're not looking to start a fund, you have to create your own principal investment money. The best way to do that is trading, compounding, short-term strategies to feed the long-term buying of quality companies. And then, of course, everybody that I know starts a business with the idea that you get to build financial freedom. Financial freedom is built not just in long-term wealth strategies, because long-term wealth takes time, it's down the road, it's generational change. Long-term wealth is not all about income replacement, but one of these pillars is. Trading income also feeds the income replacement account, which is all about trading stocks and covered calls for lifetime income. And though it's trades that are much less risky than options trades, because it's stock, there's underlying security in there, and it's covered calls. You have an underlying security backing up what you're doing. Those three pieces of the puzzle is a huge piece of why most people never get over the hump of their first year and never get over the continual cycle of funding an account, taking it to zero, and having little success cycles in between. I know a guy personally who was a friend of mine and got me into the stock market because he did nothing. And I'm not suggesting you do this, but this is a way to go about it. It's a hard way. He would pay off all his credit cards, get cash advances again, put it in the trading account, and quit all his jobs and go full-time into trading. Now, he is more of a day trader. I don't talk about day trading here. And then he'd learn, and each time he took it to zero, he'd go back in with more knowledge. Now, if he had put these principles in place first, it wouldn't have taken him 6 cycles, which was well over 10 years of his life, trying to figure out how to do this. But he had to do it with his own capital, just like you. That's I can't stress how big a piece each one of these is. And you start off with the long-term thought process first. You take 60% of your principal income that you're putting in the stock market and put it into long-term assets first, buying quality companies. You set yourself up for success from the beginning. And when you start trading stock first and you work into options, you set yourself up for even more success from the first year beginning. Now, we're also talking about trading less. We don't trade every day. Matter of fact, we don't trade every week. And that therein lies why we are a whole lot more successful than most people. Now, you would think that because more people trade more often, they'd be more successful. But no. A lot of traders kill their results by watering it down with trades that aren't ready to go for a long time. When we trade what I would call intermediate, not short-term, not long-term, but intermediate trades, because we're looking for 1 to 4 weeks. Longest trade I've ever been in was 4 weeks on options now. And if it's a stock trade, we're not going to hold it much longer than a couple of months. But the options trades 1 to 3 to 4 weeks, except during the summertime when you might catch a trade where you do it 3-5 days real quick. But that's only during the summer because you're in a choppier market. And we're not talking about doing much more than 72 to 120 trades in a whole year versus other people that are doing hundreds of trades every month. Trading less is trading more, is better for your account. I can't stress that enough. Trading with catalysts. And even the people that trade with catalysts, they trade with one chart. You trade with 3, and you will maximize your ability to see quality trades and minimize you getting into trades that swing against you really quick. These trades that you get into, and boom, before you know it, they're going against you 3 or 4 candles, and you just wish you had never messed with it. If you follow the 3-chart formula where you do trend, decision, then action, and your action is your smallest chart, and your trend, you're trading with the trend, you're not going against the trend, it'll keep you out of a lot of these silly swing trades that are not going to allow you to capitalize on having money coming in, but also having a lifestyle where you don't have to sit there and look at a chart all the time. Trust me, I know. I've got glasses right here that prove that if you look at charts too much, you will hurt your overall well-being, your eyesight, stress. It's not worth it. Do what I should have done from the beginning, and don't have yourself glued to the screen forcing trades. Do trades that are easily acceptable through your formula. Now, we talked about trading less, making money twice on every trade. When I get in a call, I also sell a naked put. When I get in a put, I sell a naked call. Every single time that anybody talks to you about trading profits, they always talk about the percentage gain in the trade. You should ask them, how much did you make on the other end of the trade? Because every trade you do, there is the opposite end of that trade that you can make the money on. And if you make money 2 times as much on every trade, I'm telling you, it will mean hundreds of thousands of dollars to you extra in your lifetime. Why do I know that? Because look, if you do a 10 contract trade or 1,000 share trade, a call, and you buy in at the ask, and immediately after buying your call, you go and you sell a naked put, you get paid the bid for that put up front. That goes in your account today. It's a check you can write today. Then when you get ready to get out of the trade, the call is profitable, the put is gone down in value, and you're buying it back, so you're buying it back for less. You're keeping that chunk in the middle, and then you're selling your call at the bid for the profit. Double your money every single trade. You're talking multiple thousands that you're keeping as that chunk in the middle, and it adds up over time, folks. It just is crazy how powerful this strategy is. This is what we talk about all the time because this is life-changing stuff right here. And this is why I do this. I do this to benefit you. And if you follow these things, you keep the stock market flywheel and you build a business from the stock market being your business versus everybody else just trying to chase trends and hot tips and doing just the trading without the long-term investing. If you do these things long-term, you will not fail when most people do.